welcome to the Veterinary Business Institute. And I say this is, you can see the shining, smiling faces of our expert panel here with us tonight. And I am excited to have them with us. I know that we've had some discussions around questions, so we know that we're not just going to throw things at you. The questions have been thought through. The questions have been considered relevant to what is really pressing and important today and challenging in the industry. So I know that we'll be able to dig into those questions. But before I do that, I just want to share with you, we have every Thursday at 5 a.m. Eastern Time, we have a veterinary business podcast. If you haven't heard of that, I encourage you to be a part of that and make sure you take some time to check that out. You're going to find, as you can see, there's a wonderful list of things that we cover, and that is really just touching on some of the things we cover, but from practice management, financial management, marketing and branding, technology and innovation, and so on, as well as things that come up in conversation. I mean, that's the idea of a great podcast, is to make it dynamic, not static, to allow it to ebb and flow with what the needs and questions are of the participants. So love to have you be a part of that. You'll see we've got a great team of panel of folks that are doing those podcasts. I get to host those, and you'll see Narain Raja, who is the founder of the Veterinary Business Institute, and he is part of that as well. So I wanted to, just as we kind of get into this is tonight, the title that we're going with is Mastering Financial Resilience in Veterinary Practices in 2025. I'd like to introduce Michelle. Michelle is the principal and founder of Fit Money CPA, where she passionately guides business owners through the financial and strategic and organizational frameworks essential to building a thriving business. I think that means that's what we're talking about tonight. Her goal is to provide clients with the insights and tools to operate with confidence and achieve remarkable growth. I'm not going to read the whole thing. I just loved each of them, had such perfect opening paragraphs, I thought. Martin Traub-Werner, his journey as an entrepreneur and business leader began at the age of 7. What were you doing before then? That's kind of a bloomer, aren't you, Martin? At the age of 7, when he dressed up as a businessman for Halloween. I love it. Over the last 4 decades, Martin has honed his skills in strategic human resources, relationship marketing, and creative problem solving, working across both small business and Fortune 500 companies. So brings to us a real widespread understanding of those very essential ingredients for success in business. And thirdly, on our panel is Jimmy Bell. And with over 35 years of experience, Jimmy Bell is the founder of a specialized accounting and coaching and consulting firm dedicated exclusively to veterinarians across the United States. His firm provides a comprehensive range of services, including accounting, financial strategy, and practice management tailored to the unique needs of veterinary professionals. So as you can see, we have definitely got some really nice, a nice mix and lineup of folks that are going to be presenting. And we're going to jump in. I'm going to stop sharing my screen and just get you, if I can just get each of you just to say a quick hello to our people and our audience for tonight. Michelle.
Hello from Kentucky. Welcome. Glad everybody's here.
Thanks, Michelle. Martin?
Yep. Thank you for the opportunity and for the generosity of everybody's time and spending some time with us today. So on the participant list, we've got some friends in the audience, which is super fun.
Awesome. That's great. Thanks, Martin. And Jimmy.
Great. And thank you for the invite. I look forward to sharing the platform with Michelle and Martin tonight. And I always like to learn from my colleagues and tap into their wisdom. I'm in cold Idaho Falls, Idaho. We had our first snow hit and stay on the ground today. So winter is coming if you haven't figured that out.
Yes, I live up in Ontario, Canada, and it was cold enough to snow today, but we had a nice sunny day. But what would we do without seasons? I mean, isn't that, they always talk in business, we tend to think of things in an annual basis, calendar basis, but I like to tend to think of business, and it seems today with the very ebb and flow of it and the very just-in-time nature of so many things, that it's better just to look at things in a season and and every season can be its own length depending on what the needs are. And so to me, season has become a very strategic word in my world in leadership. So I'm going to go ahead and I'm going to start us off with the questions we have tonight. I'm encouraged by these questions, because I think they really are going to bring out some interesting thoughts, and as well as questions you may have that you'll be able to go ahead and drop in the chat. But let me start off. We're going to start off with Michelle. And Michelle, as an expert in tax planning and strategic consulting, what are the key tax saving opportunities veterinary practice owners should focus on as they prepare for 2025?
So, it's going to be specific towards each practice, as you can imagine. So, I think what we wanted to do tonight is talk in generalities. And, some of the first things that we always talk about is, what are your goals for the year? Where do you want to be at the end of 25 versus the beginning? And a lot of times that is going to indicate that we're going to have asset purchases. And one of the reasons we want to do the asset purchases in a thoughtful way is so that we can take advantage of some of the tax laws. And most people have heard of Section 179. And what that is when you purchase an asset and it's usually the larger assets that we're looking at, an X-ray machine, ultrasound machine, things like that we can actually write 100% of that off in the current year. So, again, we're looking for the most tax advantage ways that we can work within the law. Some other things we look at is inventory management. I've seen a lot with some of my clients that they tend to carry too much inventory because they want to make sure that they have enough supplies on hand to take care of any cases that come through the door. Well, when you're doing that, you're using up a lot of your cash. So therefore, you don't have the cash flow that you think you need or you actually want. So we look at best ways of controlling that inventory. Is it the just-in-time inventory theory? Whereas a lot of suppliers can get you your inventory within 2 days. So why not let them hold the majority of that inventory for you? You pick up the phone, you call them, and they send it out to you, and you've got just what you need. Another good strategy is your retirement planning. Do you have a plan in existence for your company? What I have found is it's also a good way to retain your employees. Everybody's looking for an edge because we all know how hard it is to get the employees in the door. So offering a robust retirement plan for those employees, I have found to be a real advantage. And of course, one of the things that I love doing is monitoring the tax laws. And with our most recent election last week, we know that there's going to be some pretty big tax law changes coming next year. Let alone we have some things that are sunsetting at the end of 25. There's also promises of new and improved tax law for the next 4 years. So we'll see what's going on. We'll keep track of it. We'll let you know what's up. Keep you informed.
Thanks, Michelle. It's what I hear you saying is that there's some very specific things we can consider that can set us up to be cash efficient and deduction efficient. And
exactly.
As my accountant used to say, he says, Mike, you need to know that there's a difference between tax evasion and tax avoidance, and finding that line in there. So thank you, Michelle. Martin, I'm going to throw a question out to you. Martin, with your background in business intelligence and data analytics, how can veterinary practices leverage data to better drive financial outcomes and operational efficiencies? Now, there's a big question.
Yeah, thanks. This goes back a ways, right? So I started a company in 2013, 12, or pre-2012 even, called Vet Success, which is now VetSource Data Analytics. When we started, the idea of keeping track of client visits and revenue per client and revenue per patient was hard. It was really hard to do at the time. And fast forward now, a decade plus, almost 15 years later, and data is readily accessible and readily available. So at a bare minimum, knowing setting some key metrics for the practice and measuring those metrics and knowing what they are is super important. And it's no longer hard. There's more than one vendor in the space now. The PIMs themselves have made great strides in reporting and data analytics, and sort of there's kind of no excuse for not setting your numbers. And one thing I do want to caution against is sort of over measuring. I want to make two comments: one about benchmarking and one about over measuring. Over measuring, I over the years have bumped into people who set as they say, I want to show you my dashboard, and it's like a 15-page document that gets updated every couple of weeks or every week, or some people try to monitor stuff daily. It's like, I think that might be overkill. 4, 5, 6 key measures tracked on a regular basis, and it's the act of tracking the activity that you want to see results on. Michelle was talking about your goal setting those goals, tracking and measuring the activity, and not overthinking it. You spend more time collecting the data than you do actually taking action on the data. And so don't over-engineer, number one. And number two, the comment I want to make is about benchmarking. Which, I think it's really important to know how you're doing compared to others. But the most important thing to do is to know how you're doing against your goals and against yourself. And so using the data and analytics you can have a sense of and get an idea of how you're doing against other people, to get get ideas and share ideas. But honestly, your operating environment is going to be fairly unique. I don't really believe that every practice is completely unique. We buy the same stuff from the same people, provide the same services, but there are, the nuances of the geography that you work in, the staffing model that you've built, the service quality that you want to provide. And so setting your goals against yourself, up for yourself, and setting those benchmarks against yourself and not over-engineering it, I think is the sort of, as I've lost more and more of my hair, I've come to make peace with the idea that you can only do so many things in a year, and just get the data, measure those few things. When you're satisfied with those results, go tackle another problem.
That's good. Thank you, Martin. Yeah, you said there at the top, just having that dashboard with whatever 20, 30 things on it. I think it's an interesting thought that if you were actually to not just do do everything because it's there, but what are the 3, 5, 7 things that are most important to you? And what I heard you say, obviously, there's transactional things that are specific to the industry, whether it's inventory levels or conversion rates or sales per customer, but also what makes you enjoy going to work every day, and what's your joy measurement? How are you measuring your personal satisfaction? I heard you saying in the workplace, and to Michelle's comment earlier about the challenge in keeping great people. How are you doing? How are you measuring that with them too, and celebrating the wins? And that's a big deal in my world of how do we do that, because we get just a little complacent at times, just sort of let stuff slide, and we just lean on the science and the analytics and forget the people. And
that's right.
Our business is such a critical people business, yet it requires all kinds of science and support too. So I'm not the expert, so I shouldn't talk anymore. So Jimmy, I'm going to go to a question for you. And Jimmy, with your vast experience in practice management, how do you recommend veterinary practices balance growth initiatives with maintaining financial stability?
That's a big question. And obviously, it depends upon the initiative that you're trying to achieve or the goal that you're trying to establish and achieve. And it also depends on the life cycle of the practice. We work with established practices as well as startups around the country. And if you look at a startup, for instance, oftentimes they have no clients, or they may anticipate that they may pull some clients from a previous location. They might be new to the area. And so they're simply looking for warm bodies. They're looking for action, activity, and experience, trying to build a client base over time. Whereas established practices, they might be looking at adding staff, adding another doctor, examining additional services that they might be contemplating, new equipment, as Michelle alluded to, for tax reasons or otherwise. We advocate that we purchase equipment for non-tax reasons, although I've been on the other side of that fence. We're not involved with the compliance work, and I know that's part of the equation. But it's really important when you're doing those things to keep that balance, to understand the ROI of everything you do. If I were to give 3 tips on that question, every investment, every initiative has a cost, be it financial, be it mental capital, capacity. Every initiative has a cost. And it's really important, and we try to instill in practices that we deal with, to understand, try to get a grasp around ROI. So for instance, if you're going to buy that piece of equipment, and we really see this in conference times, and we go to a conference and we'll walk around the floor and we'll run into a client, and it's like, Jimmy, we got this piece of equipment. We want to buy this new, this new shiny thing, and the deals are great. And I got to have it. But they haven't thought through, do they need it? Of course, they'd like it, but can they make it pay? Does it make sense? And that's the ROI that you have to take the time and understand. Now, spoiler alert, there's no magic sauce. So many things that we can do in practices to improve the stability and help achieve initiatives are basic things. Now, that's easy to say, but hard to do. And so it's really trying to maximize our education, our understanding, utilize professionals where you maybe don't have that knowledge to gain that understanding. And ROI is one of those. So if I was going to go buy that $20,000 piece of equipment, granted, I'm going to get that tax write-off, which I love. I don't want to pay any more than I have to. But if I'm charging $20 a procedure for that equipment, that's 1,000 procedures just to break even on that cost. But the reality of it is that cost isn't $20,000. There's finance charges, there's maintenance, there's training, there's staff, there's all these other components to that. The second thing I would say, well, let me just ask you this. If you're a NASCAR fan, this story's for you. I happen to be a NASCAR fan. I was fascinated by it. I stumbled upon it by accident. And Michael, I know what you're thinking. It's a bunch of cars going around in circles. It's like watching grass grow. But if you dig into the sport, it is so engineered, thousandths of a second count. And the point I want to make about that, and the thing that we can learn from really a multi-million-dollar industry, is that sometimes you have to go slow to go fast. So again, with startups, they may be just starting out, and it's like, don't overschedule. Take that time to develop your procedures and your processes, mold with your staff, so that as that business grows, you're prepared to go with it. Sometimes you simply have to go slower to go fast. And even for our experienced practice owners, sometimes the patience is pretty slim. They have this idea and they just want to get it and go out and get it done and make it happen now. And we're going to make all this money or we're going to solve this problem. And sometimes they're right, but sometimes they're not. The third thing that I'll say, and Martin kind of alluded to this, is you have to keep score. What gets measured gets improved. And if you're not measuring things, you're throwing darts against the wall. You're guessing, you're hoping. That's not a plan. And so create that scorecard with good records. And I'll talk more about that later, I'm sure, because all of this stuff that we're talking about, the three of us, it's all related. None of it works without the other piece.
Good. Thank you, Jimmy. Yeah, that's so just for the record, I had the privilege of driving the pace car at Talladega Speedway.
Oh, wow.
So I actually
Nice.
do have some NASCAR blood in me. Didn't wreck it, but sure discovered the power slope. But you said something really important, and it's something we focus on a lot as well, is the difference between acceleration and momentum. To me, acceleration is how fast do you want to hit the wall, and momentum is how far do you want to move. And so it takes time, to move a wall. It takes time to make that shift. I hear what you're saying on taking time, and a couple of questions came in around ROI. We'll get back into that. But no, return on investment, return on people, return on legacy. Like, what are you doing? Are you still doing this for the reason you were passionate about to start with? So let's jump into another question for Michelle. Michelle, how can veterinary practices navigate complex tax regulations and steer clear of common pitfalls when interacting with the IRS or state tax authorities? I'm glad that's
So
your
my
Yeah,
advice
seriously. Hire
is
Michelle.
don't go it alone. Never go it alone. When you're talking to any taxing authority, they don't generally like to speak to the layperson because you get that emotion going, and you want to fight, and that is not the way to win against a taxing authority. And I say win, it's not a battle. They're just really doing their job, and we're doing our job. But as a CPA, my job is to fight for my client. And there's some nuances in the tax code that we can bring forth when dealing with, in particular, the IRS. And, again, I just do not recommend anybody try to do any of what we're talking about tonight by themselves. Jimmy has mentioned take some time to set up the processes. Well, and that's very similar with dealing with the IRS. I have been doing this for way too many years, so I know how to interact with these folks. And, again, there's a nuance to it that you have to present to them. And you don't just go in there with guns blazing. You have to be respectful. And the more respect you show them, the more respect they show us, and therefore we can fight for our clients.
Excellent. Thanks, Michelle. Yeah, it's. I was thinking the vein that there's financial accounting, which is the record keeping and all the structural stuff that has to happen. Then there's financial management, which is what we're talking about here in ROI, the interpretation of data and the utilization to grow and develop our business. But the third one that you brought up, and I really thought about it until you just said it is this way, but it's the financial advocate. Mm-hmm. And that's a role. It's such a critical role. I'm not an accountant. I'm not an expert, but I'm also not the right person to be my own advocate. So
correct.
Really well put. Thank you. Let's go to Martin. I've got another question for you. Martin, through your work at VetBooks, what are the most common financial pitfalls you see in independent veterinary practices, and how do your bookkeeping solutions help address them?
Yeah, thanks for that question. So a couple of things. The first is, if you're a business owner, there is absolutely no substitute for knowing your numbers cold. You have to know your numbers. If you want to make any kind of decisions, you got to be in control. And we meet practices all the time who are exceptionally focused on delivering great care, having a good team, worried about their clients, but have either zero interest or are unsure where to start on how to get to know their numbers. And if you're going to be a successful business owner, there just is no substitute for knowing your numbers, cold. And so, some of the pitfalls we see are people who wait too long to get themselves set up on with really detailed monthly accrual-based bookkeeping, using the AHA chart of accounts. If you're not on the AHA chart of accounts, and it is onerous. There's no question. There are 250 different accounts that you can allocate all your revenue, expenses, and balance sheet items into, at least 250. It is onerous, but it gives you the granularity to be able to make managerial decisions and do it in a consistent way. And so, not knowing your numbers, and then finally kind of getting some religion around the AHA chart of accounts and getting yourself on an accrual-based, monthly-based bookkeeping. Because the reason I started BetBooks with some friends is because I have this firm belief. Like, there's all kinds of data. And we talked about this in the first question that I was responding to. There's all kinds of data that's available to us, but it's the financial data that is ultimately the wellspring from which all other decisions are made, right? If I don't know my levels of profitability, I don't know whether I can or should be discounting my services. If I don't know my levels of profitability, I don't know what investments I can afford to make. If I'm not, managing my DVM to staff labor dollar ratios, I'm not sure whether, what hires I should be making. And so having good, tight financial controls are the wellspring from which all decisions are made. And I would say that's sort of the biggest pitfall is not being under financial control. Right.
Thanks, Martin. Yeah, I'm guessing, and depending on, I don't know our audience specifically, but you talk about, know your numbers, Deb, know that. And if you're like me, I don't really have a desire to do that. but I do know how important it is to have a vision for numbers. Like, why are they important to me? What is important to me? And why are these important? A vision, which means, do I have a vision for prosperity or success? Or what does that look like? And I just want to encourage folks that I think when you attach it to a vision of what you define as prosperity, the numbers become a process which helps facilitate that journey and achieve the desired prosperity or success that you're going for. And I think it's hard sometimes just to get your head around that if that's not your thing. So start with a vision.
I mean, the numbers don't lie.
Exactly. Yeah.
So, you can have a vision, but if the numbers don't support the vision, something's got to change.
Absolutely. Yeah.
Hey, Martin, just as a suggestion, would you like to explain the difference between accrual and cash-based accounting?
How much time do we have?
2 minutes.
Okay. So I am just, scrappy business guy. I am not a CPA. So Michelle, you'll check me on this. Okay.
You're all good.
All right. So, cash accounting versus accrual accounting. Most of the clients, Jimmy, I don't know, maybe you can check me on this too. Most of the clients that come to us for bookkeeping services are usually on cash basis, right? So cash accounting says that you record, and I'm going to talk about the expense side of the ledger, that you record an expense in the month the check was written. So the example that I use all the time is parasiticide sale. It's February, and your parasiticide rep comes to you and says, "Doc, I've got a screaming hot deal for you. If you buy 3 months worth of parasiticides, I'll give you a 15% rebate." And you're like, "For sure, great deal." right? So you write a $30,000, $40,000 check and you're expecting $4,500 to $6,000 worth of rebate. And the question is, how do you account for that transaction? Cash accounting, you take that full $30,000 or $40,000 charge in the month of February. Here's the problem with that, is that you don't have the corresponding revenue to offset that $30,000 or $40,000 charge. So when you get your income statement or your profit and loss statement for the month, you're going to have this sort of anchor of $30,000 or $40,000 charge against any revenue that you've made. And it really is not a true reflection of what's happened in the business. It's sort of, you get this lumpy profitability based on where you spent your money along the way. And the only time that comes out in the wash is on December 31st at 11:59 p.m. You lock the door on the last client, you add up all the revenue, you add up all the expense, you include some inventory stuff, you throw it over to Michelle. She frantically has to put it all together, and you get sort of this one picture in, March or April around sort of how you've done. The alternative is the accrual method of accounting, where instead of putting that $30,000 or $40,000 charge in February on the income statement, you put it on the balance sheet in inventory. And then every time there is a parasiticide transaction, somebody purchases parasiticides from you, you transfer the corresponding expense from the balance sheet over to the income statement. So you have this one-to-one correspondence between the revenue that was generated from parasiticides and the expense that was required to generate that revenue. And when you know the revenue of the thing and you know the expense of that thing, you have the gross margin of that thing, which means that you've got the levers that you can pull. We're just using parasiticides as an example, but you can do this up and down. This is why the AHA chart of accounts is so powerful, because you've got matching income and expense accounts for all kinds of things, some reference labs, surgery suite. You can manage the gross margins of each of these elements of the income statement.
Thank you, Marty.
Oh, you did great.
She was nodding her head the whole time. You're good. I think the other, of course, with accrual-based accounting, in terms of budgeting, it makes it easier for you to set up a budget and actually to track your historic records in a way that allows you to really appropriately, to your point of inventory, buy according to what your needs are, notwithstanding the incentives that are thrown at the business at different points in time in the year. So,
100%. That was super nerdy. Thank you for indulging me in that.
Yeah. So I don't think we're going to allow Martin to have another question now after that. So,
I'm totally good with that.
No, I think now. So let's go to Jimmy, and say, Jimmy, what steps can a veterinary practice? Well, I just sort of led you into this. What steps can a veterinary practices take to improve their budgeting processes and ensure financial goals are met consistently?
Well, before I answer that question, I would just want to applaud Martin for that, because we asked potential employees that we interview for, and I had interviews today, as a matter of fact, and we asked that question, including to MBAs, and they don't hold a candle to Martin. You need to go to the accounting schools and teach in your spare time. And I could go on and on about cash flow as well. Martin and I are absolutely on the same page on that one. So in terms of budgets, first of all, budgets is not a 4-letter word. Mm-hmm. Now, in the old days, and my hair's gray, and so I've been around a while, budgets were something that were required to get financing and a tool to get the business off the ground. And what would happen is that people would put these, in essence, forecasts together. They'd get their financing and they'd throw them in the drawer, never to look at them again. And unfortunately, we still see practices. We run across practices. Hopefully, it's none of my clients. Run across practices that do that. And so the first thing is to understand what a budget is. It's a tool to help make you better. Many people think it's a club. It's a scorecard, and it is a scorecard, but it's not meant to belittle you or to judge your performance. It's meant to be used as a tool to make you better. My partner, had a 5-point step process for budgeting, and we presented this at a couple of conferences. So I'll share that in this question. And the first one is simply establishing goals. And I say, make them your goals. Martin alluded that practices are different, and they are, because the people are different. The owners are different. The employees are different. The location is different. And so be yourself and build that into your budget. You might as well be yourself. Everybody else is taken. So establish your goals. And so if your goal is to increase dentistry, for instance, that's great. That's an admirable goal. And we have practices that we're going to build on our dental desires and increase our revenue in that area. And that is a goal, but that in itself is not enough. So establish goals and identify what it is you're trying to do. Obviously, a budget is a consortium of all of the different aspects of a practice from a financial standpoint. And I might add a non-financial standpoint. We encourage practice owners to budget non-financial desires and goals as well as financial. But I'll stick to the financial goals. The next thing I would say is use technology. There are some great tools out there to help facilitate the ongoing evolution of a budget. And you notice I said ongoing evolution because it's not a one and done thing. So there's programs like Fathom and Giraffe and Plan Guru. Those are all good assets that you can incorporate, a practice can incorporate. We use some of those ourselves to play with those numbers. Life's not static. That budget is not static. The next thing I would say, or I should say my partner says, I need to give credit where credit's due, is to quantify everything. Quantify your goals. So we want to increase dentistry. What does that mean? I want to increase from my current level of maybe 0 or 1 occasionally to 2 dentals per week. All right, I can wrap my hands around that. Now, take it a step further. What does that represent in terms of revenue based on your billing philosophy, based on your market, whatever that looks like? But the point is quantify it. I like to say everything in a practice is quantifiable. And it's not just the financial stuff that's quantifiable. It's all quantifiable. The next thing is once you put that budget together, don't throw it in the drawer. Review it regularly. With today's software products, you can measure actual results against budgeted results to get those variances. Again, using that AHA chart of account that Martin alluded to on an accrual basis so that you have proper matching of income and expense for the period that you're recognizing or analyzing. Review it regularly. And that doesn't mean at the end of the year or at the end of the quarter. That means regularly. It's much easier to make small course corrections than it is to turn a 42-foot sailboat around in a storm like you were talking about earlier. I'm not a sailor, so I don't know that, but I am a pilot and I understand little changes. And that's what budgeting is all about. The final thing is change it as needed. Circumstances change. When I put that budget together, this was the plan. This is what it looked like. This is the results that I expected. But today, here's what I got. What can I do to modify that? Because while I'm concerned about the past, we spend a lot of time looking at historical data. We really want to focus on the future. And so modify that, analyze it on a regular basis. Budgeting is not a 4-letter word. It is your friend. It is a tool. I don't care for the name, but it is a great thing for practices to do.
Thanks, Jimmy. That's so important. I always think, with employees, we're always trying to make sure they're valued and heard, that we're empowering them and engaging them. Budgets are a great place to measure wins and to be able to celebrate what is being planned and being part of the planning process and actually celebrating the wins of the results and be able to tighten down the things that aren't working so well as well.
Yeah, I love that. And thank you for bringing that up because it's not just what can we do better, it's what can we celebrate. Exactly. I'm all about celebrations because every practice, regardless of how bad or how good it is, has ways to improve, and things to celebrate.
Absolutely. Yep. Thank you, Jimmy. All right. Well, let's go to, I've got another question for you, Michelle. And from your experience with clients, what financial and operational adjustments have proven most effective in strengthening the financial health and resilience of veterinary practices?
Great question. I don't know where you came up with all these great questions. When we're first working with clients, and I know Jimmy does this. Jimmy and I actually have worked together on a couple of clients, so that's how he and I know each other. And I know Martin can agree with this one too. But anyway, when we're first working with our clients, we want to look at, again, going back to the original question, where do you want to be? Where do you want to go? How do you want to set those goals? We want to look at, maybe there's some income diversification that we can come up with. Jimmy was talking about dental. Well, maybe it is dental, maybe it's derm, maybe it's a combination of that plus maybe some retail. We also want to look again at inventory management. Excuse me, we talked about that a little bit earlier. How do we control that inventory? How do we keep our cash in our pockets as opposed to giving it to a vendor? And of course, being the tax geek in the group, I'm always into tax planning. But just as a real quick example, sorry, I'm getting over COVID from last week. But anyway, had a client and she was having some cash flow issues. So the first thing we looked at is, are you charging enough? Are your fees right? Are they in line with everybody else around you in your city or in your area? And once we determined that, yes, they were in a line with the competition, then we looked at, again, maybe some different revenue streams. One thing we did start was a subscription-based wellness program, so that the clients are paying the veterinarian on a monthly basis, so the cash flow kind of evens out in that realm. We also introduced an online pharmacy for this particular veterinarian, and again, that's freeing up some of that inventory, freeing up some of that cash that they don't have to keep those meds in house. And another thing that we did was they had some spare room in their space, so we opened up that to an urgent care that is going to utilize that space in after hours. So they're able to rent that space. And again, it's going to be another nerdy tax term, but they're going to produce some rental income that is passive, and passive income and passive losses kind of go together, which is a whole nother topic we can talk about. We also instituted a computerized inventory system. And I know both Martin and Jimmy have alluded to that in this day and age, with all the technology that we have to take advantage of it and use it to our benefit and help us grow stronger. And of course, one option is to also speak to your suppliers. Maybe you can get, instead of that 10%, 30% discount in February that Martin was talking about, maybe we can spread that out over the whole year so that our expenses are flattening out a little bit for us. And again, there's a cadre of things that we can do from a tax side. And, to give you one, it would not do you justice, because I don't know what your tax situation is. And, again, there's so many opportunities out there that a lot of people are not aware of them.
Thanks, Michelle. Yeah, I mean, it is very specific to people's needs, but some great hands-on stuff we could be thinking about right now that you could be looking at, where this is about planning for 2025. Sounds like some good opportunity and incentive there to think about that. But let's go to Martin. We've got some great questions I want to try and get in, so we're gonna need to watch our time. And Martin, you've been deeply involved in leveraging technology for the veterinary industry. What emerging tech trends do you believe will have the biggest impact on financial management for practices in the next few years?
I mean, it's going to sound super trite, right? So like, I am not going to spend time on AI, right? So, but, there's a lot of automation that AI is enabling. And I think that, what you'll see is tools starting to use AI as an accelerator of their work. I'll give you an example. We're messing around with an AI assistant that will connect to the income statement and balance sheet and make it easily able to where you won't need to log into QuickBooks to ask and answer questions. You can just ask and answer a question right off the website. So I don't believe in the sort of revolutionary, we're going to put everybody out of a job and like that's not going to happen. But I think the stuff that we want to do will be faster, better, smarter. And then there are some great tools that are being built. Michelle's referenced inventory a couple of times. There's some great tools like Inventory Ally that are being built that are taking, years and years of knowledge and embedding them into technology. Purchasing solutions are getting better, faster, smarter. Vetco, High Five, those kinds of things have been really well done. And so, I don't believe there are any big silver bullets that are out there. I think it's going to be incrementalist type stuff, but it's going to happen at a faster pace.
Great. Thank you, Martin. Yeah. Certainly is evolving quickly. It's like it just keeps speeding up, it seems, or at least they say when we get older, things speed up, but it seems like it's getting an awful lot faster.
I'm just moving slower.
Yeah. Jimmy, how do you help veterinarians manage and reduce overhead costs without compromising the quality of care?
I begin with scorecards. I talked about scorecards earlier. That's financial data, non-financial data. You need timely, accurate information, accrual-based accounting. Cash-based is great for tax, but it's not a way to manage your practice for success. And that for us, and I know it's that way with Martin, that's a non-negotiable for us. And it's interesting because we're unique in that way. People have a tax mindset. I always like to say, I want to make you as much money as possible. And people like that until they start thinking about tax. And then it's like, oh, I'm going to spend money because I don't want to pay tax. Now, back in a prior life, I spent a lot of time doing tax returns. Michelle and I have talked about that. Now we don't do any compliance work because our focus, they're two separate disciplines with two distinctly different purposes. And so we work on profitability. Back in the day, I'd tell my clients, they were complaining about paying tax. I'd say, well, just write me a big check. I'll pay it. Never got one to do that. But scorecards for financial and non-financial data. The biggest expense of a vet practice, and we all know that, is staff. And my question to the audience is, do you know what your staff turnover rates are by area? It's alarmingly high in veterinary medicine, actually in many professions. People don't stick around like they used to. Like my parents and my grandparents, they had a job. They might work their whole life in the same job. Now people might have 10 or 15 jobs over the course of their career. That's pretty common. So minimizing staff turnover, investing in the staff that you have is one way to make that happen. It's easier to keep staff than it is to retrain. So you want to talk about increasing overhead costs, increase your staff. If you've got 1 out of 5 leaving every year, that's a big number. That's a big number. How do you minimize that? And when you talk about the financial data and the scorecard, those are dollar and cents things. And when you look at the scorecards for non-financial things, those can be related to financial things, but it's all related. There isn't a process in a vet hospital that you can't improve by having good financial data, by having scorecards, both financial and non-financial. The next thing I would say is utilize technology. Martin alluded to that. AI is a powerful tool, and I'm not going to spend any time on that, but it's amazing how polarizing that topic is. As I talk to practice owners or go to a conference and listen to people around the coffee table over AI, it's like they're dead set against embracing what the future has to bring. And I think the success of a practice and the way to manage overhead costs and be successful is to embrace the opportunities that are coming our way. And they will, and they're coming faster and faster every day. What got us here won't get us there. So it's a change of mindset. And the last thing I'll say is consider outsourcing the weaknesses that you have in your practice. I'm not talking about the medical stuff, but hiring companies or people like Martin and his company, or Michelle, or our company, or others. There's a whole litany of professionals out there that are specifically geared towards veterinary medicine. Use outside professionals to make you stronger.
Great. Thank you, Jimmy. That's outside professionals. You can't do this thing alone. And with the speed at which things are happening and the amount of information that we're bombarded with from so many different sources, we don't really have an agenda-free space to function from, and we don't have time to even consider it. So professionals are a great way it's like weight training. You want to get better and fit, you got somebody help you with it. So I got time-wise here, we're going to, Michelle, based on your experience in aligning financial structures with long-term business goals, what strategies would you suggest for veterinary practices aiming to optimize their entities for growth?
So, again, I'm the tax nerd, and Jimmy has brought up some excellent points that, from a tax perspective, we may not necessarily look at it that way. But again, excellent points. One of the first things that we look at is what's your entity structure. You're a sole proprietor, you're an LLC, you're an S Corp, partnership. We want to make sure that you're setting yourself up, again, from my side, the tax perspective, for the best tax advantages that you can possibly get. And I'm going to be a broken record here. We're going to look at cash flow. We're going to try to figure out how we can increase that cash flow. We've already talked about maybe bringing in some other lines of revenue. So, kind of bouncing off of what Jimmy was talking about, we want to look at your strategic budgeting. Are you using your dollars in the right place? Could you maybe shift some over to marketing, maybe out of, I don't know, maybe your cleaning budget. So, we just want to make sure that we're using your dollars in the right place. We're going to leverage you for the tax strategies, the best ones that are going to fit your goals, where you want to be, where you want to go. We're going to help you with developing your growth-oriented financial goals. Again, it's where do you want to be at the end of the year? You've got to know where you're going, or you might put your ladder up against a wrong building and go in the wrong direction. So it's very important to know where you're going. And these are just a few of the strategies that we implement. And I know Martin and Jimmy are going to come up with some more. But again, it's based on the uniqueness of your practice, and we want to help you grow in the best way that you feel comfortable growing, because it's not all the same.
Great. Thank you, Michelle. One size does not fit all. We certainly know that. So I just see we are at 9 o'clock. So we want to keep within an hour. I have a question here I'd like to put out, though, to you, Martin. And if you could kind of give us a tight answer, that'd be great, just so we respect our audience's time. And then we'll be wrapping up from that. And I've got a couple of things to make sure I share with you that I think you're going to want to hear. So please don't leave. We've got the question is, given your extensive experience in relationship marketing and process automation, how can veterinary practices use these tools to improve both financial performance and client satisfaction? That just is a really relevant question, I think, to our audience.
Yeah, and I'm going to pivot. I'm going to pivot slightly. I will keep it tight. I'm going to pivot slightly. Client communication is, at this point, there are a lot of really, really, really good client communication tools in our space. And so I think find one, implement it to maximum effect. And if it's not working for you, find another, or, and this is sort of jumping off of Jimmy's point, find somebody who can help, because it is impossible to be a great DVM and a great marketer, a great financial manager, and all of the other many things that you have to be as a business owner. And so, there's great people in our industry that live in the ecosystem to help practices be more successful. And whether it's around marketing automation, process automation, financial services, tax planning and compliance, just get help. And one of the places that I would point people to is there's a wonderful organization called Vet Partners. It's vetpartners.org. And you will find a list of literally several hundred people who can help with just about any part of building your vet practice.
Excellent. Thank you, Martin. I'm going to wrap us up at this point. I just want to, first of all, thank you, each of you, for great answers. And I think, we said, are we going to be able to give somebody something that they can actually take away and have an aha moment in what you shared, or take something from it that they can immediately think about or apply to their practices? Thank you for you guys doing that tonight. Clearly, there's lots of takeaways from this, and there was lots of thinking. Now, we've also posted in the chat, if you haven't seen it yet, we've got a posting there for each of our three experts on how you can reach them, and a little profile of them and their specialties. So please make a point of grabbing those links and being connecting with our expert panel. And I'm going to flip over to share my screen for a second. So today we tried to cover a lot of things, but we kind of just touched on a lot of those aspects you see up on your screen. There's so much more to cover, but you guys did a yeoman's job of covering those for us. But I do want to, thank you, obviously, as an attendee to be here, but also as a token of our appreciation, we're excited to put an offer to you. Narain, who is the founder of the Veterinary Business Institute, wants to put forward to anyone who's attending today to be able to avail themselves of a free marketing strategy with Lila Stone, who's a veterinary marketing consultant and marketing director with Echo Marketing. Narain is the CEO of Echo Marketing and as I say, the founder. I know that Brooklyn's going to put that link up in the chat, but you can go to that link and book yourself a session. Now, there's no, there's a saying, marketing plants the seed, advertising reaps the crop. Today there's just, that lines are blurred, and there's so many variables coming at us. Even some of those markers that we were talking about and scorecards in the marketing side, it's just so complex. And this would be a great opportunity for you to be able to take advantage of this, see if it adds to it. But I want to add to that we'd love to have you take advantage of this with Echo Marketing, but also our three experts. You have heard some great comments from them, you have heard some great ideas and perhaps something that you need to think about advancing yourself. So I'm going to go ahead and at this point, thank you again, Michelle. Thank you, Jimmy,
You're
and
welcome.
thank you, Mary, for just an amazing time together. I look forward to us having an opportunity to do this again soon. I hope that we will. I encourage anyone who has been listening and has had a takeaway that they would make a. We always like to get comments and reviews. Like us and invite your friends, other businesses. I know that our panel members had folks that they're connected to here tonight. I'd encourage you to think about who else might benefit from this in our next podcast. With that. I wish each of you and all of us a prosperous and successful 2025.